Hello everyone, George DeSantis here with the look at the market for the week ending November 11th, 2016. And as usual, before we begin to look at charts, let's read you the disclaimer. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. Consult a licensed professional investment advisor for investment advice. I am not an investment advisor. Let's begin by looking at the monthly chart of the S&P 500 as we usually do. Here's the monthly chart of the S&P 500 we usually look at. I've changed the background to a black background. If you get the email from me with the chart, with the link to the video, and let me know whether you think the black background is any better than the light green that I was using before. I believe it's a little better. The bars stand out a little more clearly. Well, let's take a look. First of all, the instantaneous trend line is below the Kalman filter. So technically, according to Dr. Ayler's approach, the MESA approach, we're in an uptrend on the monthly chart. So the long-term trend is up. We can see from the closing tick on the right side of this price bar that the market closed closer to the high for the month than it did before. You know, a week ago it was closing down at near the low for the month. So that's a good sign. Parabolic is below the most recent bar. And of course, we've been through about half the month. We've only had about 10 or 12, 11 trading days so far. In the middle of the chart, we have MACD. MACD is hugging the zero line. It's a little below. It's at minus 1.16 right now. So we need some more impetus here, impulse, I should say, in order to get this MACD moving up if we're going to continue an uptrend. At the bottom of the chart, we have Elder Force, the 13-day average of Elder Force, and it trended down for a couple of weeks. And last week it trended up and broke through this trend line here. So that's encouraging from a bullish standpoint. So the monthly chart then is still looking pretty bullish. Let's take a look at the weekly chart. Here's a weekly chart of the S&P 500. First of all, we should note that since the Kalman filter is still below the instantaneous trend line, in other words, this yellow line is still below the blue line, although it's ticked up, technically we still have some caution here because the trend is down. The parabolic is still above the most recent bar. So a little caution here is required, definitely. But we do have a nice turnaround last week. We'll see if we get any follow through on that. If we get some follow through, we should find a parabolic below next week's bar, and that would signal a switch again to an uptrend. Now in the below that the price bars, we find percent-R with a 30-day period. What it did here last week was just simply bounce off of that 50% line, and now it's above 80%. So that's encouraging from a bullish standpoint. It says that the momentum is pretty high as far as last week's action is concerned. And as far as RSI 12 is concerned, we also got a bump above, a bump off the 40% line, and it now is trending up, or at least it trended up last week. We keep getting this pop-up below the chart here. MACD at the bottom of the chart last week trended up from below the zero line. Now, should we get a follow through next week, we should find that this MACD histogram gives us an even shorter histogram below the zero line. Now, as you know from Alex Elder's work, what he points out in all of his writings, all of his books, is that one of the best times to be entering the market, either on an individual stock or the indices, is when we get a tick up of MACD from below the zero line. So we'll see how that plays out. But as far as the chart is concerned, We seem to be having a reversal here since RSI 12 bumped off to the 40% line. Our percent R bumped off the 50% line. We had this nice bullish bar, and so we need to see if we get any follow through next week. Let's take a look at the daily chart. Here's a daily chart of the S&P we usually look at. It's the 930 approach where you have a 9 EMA and a 30 weighted moving average. So we can see here clearly that the 9 EMA, the yellow line, once again crossed above the 30 weighted moving average. So that's signaling a change in the direction of the trend on the daily chart. And we had these nice bullish bars here. On Thursday and Friday, we had some dojis, and in fact, we had a hanging man candlestick here. So what is that? What is that suggesting? It's suggesting that that we are likely to see. It's possible to see a pullback back to these trend lines here before we continue to go further. So perhaps, again, it's perhaps, on Monday, Tuesday, we might get a somewhat of a contraction or pullback in price. But since we have this change in the direction of a trend, the rest of the week should give us some more bullish action. We'll see how that plays out. Now, the parabolic is below these most recent bars, the last 3 bars, and this is a daily chart. So that tells us that the trend is now, according to parabolic and the 9 EMA, crossing above the 30 weighted moving average. We are now in an uptrend on the daily chart. So while the weekly chart was still in a downtrend technically because the Kalman filter is below the instantaneous trend line, we can see that the daily chart is signaling that that may not be the case for very long. We may actually see a continuation of the uptrend. RSI 12 went above its 60% line again, and it's telling us that the trend is continuing to be up on the daily chart. As far as the pro-buying indicator is concerned, we can see that we bumped off of this trend line, okay, that was giving us the trend of the lower highs all the way down, and now we bumped off of it, and so the pros have done some buying here in the last week or so, during the last week. Also, percent R is once again below 80% here on this chart, and so we have some strength in the market, at least on the daily chart, and it's also being reflected on the weekly. Let's take a look at a different chart. Here's another chart of the S&P, and in this instance we have the Kalman filter and the instantaneous trend line. So what we have here is that since the Kalman filter broke below the instantaneous trend line back in October, around October 10, it remained below it, and now it's once again above the instantaneous trend line. So the Kalman filter is now signaling that we have an uptrend on the daily chart. We can see the same price patterns we saw before, of course. But one thing to note on this chart is that Jerry Appel's sum of the rate of change indicator is now signaling uptrend. So we are given permission to buy, according to this indicator, to buy the index once again. I bought some more SSO last week. I had some, I bought some more. MACD, of course, is trending up above the zero line. And this is a zero line here. You can see it on there isn't a line, but you can see that it broke above zero. That's zero here. And so the trend is now up. We've trended up from below the zero line. And if we look at the bottom of the chart, percent R is also above the 80% line. Well, we saw that on the previous chart. So let's move on. Let's look at something else. I want to look at the weekly chart of the NASDAQ composite. First thing we should note is that the Kalman filter is still above the instantaneous trend line, even though we had this big bearish bar here 2 weeks ago. Last week we had a nice bullish bar, and the Kalman filter ticked up a bit, so we are still technically in an uptrend on the weekly chart of the NASDAQ composite. And again, as I often say, if the NASDAQ leads the rest of the market, this is a good sign from the point of view of the bullish scenario. Now, yes, it's true the parabolic just switched to being above the last week's bar. However, that could quickly change around again, just as it did here, back here in July. So let's take a look at RSI 12. RSI 12, since it crossed above the 40% line, is still above it. It came down as it did here, tested it a bit, came down and tested it here, and it trended up last week. So we'll see how that continues to play out. But so far, the RSI 12 is still in an uptrend, signaling an uptrend, okay? Now let's look at MACD. MACD, as I saw before on the S&P, MACD is now trending up on the histogram. And that's the important thing. The same holds true here for what I said about the MACD on the weekly chart, given Alex's interpretation, that one of the best times to be buying a stock or the index is when MACD is beginning to trend up from below the zero line as it is here. So let's take a look at something else. The daily chart of the NASDAQ. Now on this daily chart of the NASDAQ, we can see that the Kalman filter just crossed above the instantaneous trend line. We had a pretty bullish bar here on a daily chart on Friday. We did have a pullback on Thursday when it hit the upper Bollinger Band. The other thing we should look at, so this Kalman filter is signaling an uptrend once again on the daily chart. The parabolic is now below the most recent price bar, so that's telling us that we are in an uptrend. It switched from being above here to being below the most recent bars. MACD trended up from below the zero line and is continuing to do so. It's now above the zero line. The sine wave of the MESA system is now is continuing to be irregular. At the bottom of the chart, we didn't get a signal yet from Jelly Appel's sum of the rate of change indicator. We're still on this sell signal here. And the way I use this is I don't buy it unless we get, buy the NASDAQ unless we get a cross above it. And sometimes we get whipsawed as we did here. But the daily chart is definitely trending up. We'll see how this continues to play out. We need to see some follow through this week. So let's take a look at something else. Here's the stockcharts.com chart with the impulse system. We have your red, blue, and green bars. And for the last couple of weeks, this is a weekly chart. So the last few weeks, in fact months, we've had a combination of blue and red bars, blue and red bars. And last week we got a big turnaround with a nice green bar on very heavy volume, on pretty heavy volume here. We also saw that uptick of MACD as we saw earlier on previous charts. The other thing to note here is that Williams percentile, the 30-day period, bumped off of the 50% line and is now above the 20% line. So we found support here. And as I mentioned last week, usually when Williams gets to these levels of 80 on this chart anyway, we do get some kind of a rally, okay? So it seems that we're getting that now. Let's take a look at the daily chart. So on the daily chart, we've had these nice combination of green bars and on pretty good volume on the daily chart as is reflected in the weekly as well. And MACD is now trending up from below the zero line, but it's now above it. That's nice. That's bullish. We saw again when we have these oversold. I mentioned last week we were very oversold. When we're in this area here, we oversold, and we rally here, we rally. From here, we rally again, and so on. And from this area, last couple of weeks or months, we are now rallying back up above to get above the 20% line on percentile. So these charts are looking pretty bullish. Let's take a look at another one, okay? Let's take a look at them. Here's one last chart, the new high, new low index. While it was trending down for a while, it seems to have broken that trend. And this is all we have time for, so I'll say goodbye. Have a wonderful weekend. It does look as though we might get some follow through, and enjoy the rest of the weekend.